The producer and presenter of the video titled, Secular Bear Market on the Horizon, is Michael Markowski. Michael is a 44-year market veteran and algorithms developer who Fortune magazine named as one of its 50 top investors. Michael develops algorithms to find public and private companies, including InvestView, at share prices which have the potential to multiply. He utilizes algorithms to predict bankruptcies and significant share price declines for large public companies and to predict major market tops and bottoms. Michael's algorithms enabled him to predict the March 2020 crash and precise March 23, 2020 bottom, the 2018 October to the Christmas Eve market crash, as well as the Brexit crash and the post-crash bottom. Finally, Michael predicted the crashes of Lehman and 4 other brokers in September of 2007. This was 1 year before the collapses of the brokers caused the crash of 2008 and the Great Recession. The majority of Michael's predictions for market tops and bottoms, as well as the growth and bankruptcy candidate stocks, are verified by major media publishers. This includes the Fox Business Channel, Fortune Magazine, Forbes.com, and Smart Money. Fortune Magazine, in its article about Michael being one of their top 50 investors, said, "The buy ratings which Michael's firm, Stock Diagnostics, had on relatively unknown companies is what really grabbed the attention of institutional investors, with the top picks being up 80% on average in 2003. Michael's top pick he gave Fortune for their article was Webex at $19 per share. Cisco Systems paid $57 in cash per share to acquire Webex. The pick he gave Fortune for their article produced a 200% capital gain for their readers." Michael now sees a secular bear market on the horizon. Based on the prior secular bears since 1802, the Nasdaq, as well as the S&P 500, could potentially decline by more than 50% from their peaks. For the 2000 to 2009 secular bear, the declines for the 3 major U.S. indices, Nasdaq, S&P 500, and Dow Jones, ranged from 78% to 44.8%. It took the Nasdaq less than 2 years to decline by 78% after the last secular bear began in the year 2000. His recommended secular bear investing strategies and portfolio allocations are available at alphatac.com. His strategies and portfolio allocations include the following asset classes to be exclusively invested in. This will enable a portfolio to grow rather than decline during secular bear markets. Algorithms that trade shares that go up when the market goes down. Buy and hold shares of private startup and publicly traded microcap companies, including InvestView. And cash. Without any further introduction, here is Michael Markowski.
Thank you for the introduction. The timing for the secular bear to begin will not be covered in my Secular Bear Market on Horizon presentation. For updates about the timing of the secular bear to begin, subscribe to Spotlight at alphatac.com for updates. The purpose of the presentation is to educate investors about secular bear markets being extremely dangerous, asset classes to avoid during secular bears, and asset classes to invest in during secular bears. This chart depicts the Dow Jones Industrials Composite Index increasing by 450% from 1921 to 2021, an average increase of 4.5% per annum. This chart depicts the 4 secular bulls and 3 secular bears which occurred from 1921 to 2021, and also that markets are secular with each secular bull followed by a secular bear and vice versa. This table depicts that the Dow from 1929 to 2021 had substantial gains for its secular bulls, which began in 1949 and 1982. The 2 bulls were followed by the secular bears, which began in 1966 and 2000 and resulted in declines of 60% and 45% respectively. This slide depicts that the Dow Jones has been oscillating from a secular bear to a secular bull since its inception in 1802. The shortest duration for a secular bull has been 8 years. The shortest durations for secular bears also 8 years. The Dow's annual average gain for a secular bear has been less than 1% per annum, and for a secular bull, 15.3% per annum. The prior secular bull high is not exceeded for 15 to 26 years. Cyclical bull is not to be confused with a secular bull. This chart depicts 2 cyclical bulls occurring during the 1966 to 1982 secular bear. A cyclical bear is not to be confused with a secular bear. This chart depicts 2 cyclical bears occurring during the 1949 to 1966 secular bull. Secular bull strategies of buying and holding blue chips, dividend stocks, mutual funds, and trading blue chip dips do not work during a secular bear. The Fidelity Magellan Mutual Fund gained 692.5% for the 1982 to 2000 secular bull. The fund then gave up most of the gains and declined 75% for the 2000 to 2009 secular bear. The fund has increased by 260.4% during the 2009 to 2021 secular bull. Cisco Systems, at a valuation of $500 million, was the most valuable company in the world at the height of the dot-com bubble. Cisco's share price increased by 89,863% from its 1990 IPO to 2000 before the dot-com bubble popped. As of November 19, 2021, Cisco shares had not recovered back to their 2000 high. Ford Motor has never gotten back to its 1999 all-time high. General Electric's dividend per share increased by 147% and from 34 cents to 84 cents during the 2000 to 2009 secular bear market. Those who held GE for the dividend income lost 80% from the 2000 high to the 2009 low. GE shares will likely never recover back to the 2000 high. This table contains the performance of the share prices of blue chips during the 1966 to 1982 secular bear. The declines for the shares of the companies, all current or former members of the Dow Jones Industrial Composite Index, ranged from 7.75% to 61.54%.